Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we're going to talk about a pattern that is re-emerging and at what you can expect out of the stock market from here. Let's dive in.
Trade Genius.
Okay, Bob, so you were talking about a pattern you saw from 2018 re-emerging. Can you tell us about it?
Yeah, so right now, we're kind of doing a recovery from, a pretty good sell-off. I think it was close to 10% sell-off in the indexes here. Volatility went to 60. And it was a really interesting analog that one of our customers told us that when you get a move like this from 20 to 50 and then back down to 20, it doesn't really break it for 75 to 100 trading days. So you have to kind of be conscious of the fact that we may end up doing like an ABC pattern fill. Now, typically going into OPEX, Friday ended up being up, but the volume was, it's like everybody took the day off almost and they squeezed vol down to close to under 21 there for a bit. And then so your expectation would be Monday up. But let me show you the 18 slide first, Phil, which is not the one that you have up. Yeah, that one. So in 2018, we had this really sharp correction like we had this time. And then we had this move up. Basically, it turned into a dead cat bounce, but it was not a normal dead cat bounce. Typically, maybe 1 or 2 days dead cat bounce, but this went for almost a week. And then we rolled over and made a final low before we started consolidating again. So lo and behold, you have a 2024 showing up, another volatility-induced sell-off, and that's the next slide. And tell me if this doesn't look very similar.
Oh, yeah.
So you had this sharp move down. We filled the one gap. I put a red line where the other gap fill is fill. And my thinking is, if I'm perfectly correct, is that we should get a Monday up unless there's a war in Iran that causes unexpected damage, okay? And then maybe even push into Tuesday, because, the rule is Friday up, Monday up, Tuesday up, Wednesday, Thursday down, and that may reinitiate the what I would consider the C leg of this ABC move, and we make a new low going back to almost to the left side of that chart down there. That's my working theory right now. We still have issues. We have volatility reset on Wednesday, and those guys may pump the volatility back up into September. The volatility guys say the window of weakness is all the way through to September OPEX. So we got to be really, really concerned that we may get a sharp correction down here, in the next week or two before we kind of settle in. And maybe at the end of September, we're going to get that pre-election drift higher fill. So I thought I just want to give people an alternative view, or I may be right on both counts. I may have my cake and eat it too here, with vol pushing down into Wednesday and then get a re-energized into the end of the week and cause the market more pain. Look, the Iranian news is not out of the news yet. The Japanese yen is not done yet. And this market, pretty good damage done to the market. And they still have another gap they have to fill, and I think that'll be resistance fill. So I want to throw it back to you, get your thoughts on what I just posted here. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
The way I'm looking at this right now is I'm being open-minded because my major working thesis is that the market blows off to 6,000 and change on SPX. But I'm not opposed to changing that if the facts present themselves. The first thing that this market has to do, if we're going to get the blow-off scenario, is it has to get back over 5,500. Now you have that gap area there at 54.10, and that gets back into that neckline of really what we have as an head and shoulders on the daily chart, right? Which is a bearish pattern. So we get back into the neckline of that. Now, if we get back over the neckline of that, which means getting back over that 54.10, 54.20 area, that turns into support, then I think the blow-off thesis is back on the table. Right now, I would say I'm cautiously optimistic, but if we get to 54.10, we get to 54.20, and we fail there, and we get knocked back down, and I think that's also somewhere in the vicinity of the 20-day moving average as well. The 20-day moving average typically will reject when you've lost it as hard as we have in the past. They'll come back up initially and they'll get a rejection. So you do have to allow for an initial rejection, but if it doesn't claw back in, in a 2 or 3 days time and test it again and break above it, then we have serious issues, because every bear market creates a major lower high, and that this would be a major lower high. And then you have to realize the top's in. So the next, even this could manifest and play out next week. So next week's really important. I also feel that it's the same for Bitcoin too, which we'll get into tomorrow's video more. But this is a critical juncture here on whether or not we have to change our major thesis from a blow off top to a early top. And now we've got to start positioning ourselves for nothing but lower highs and lower lows for many, 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 many months to come, Bob.
Yeah, I think your 110 week rule starts coming into effect here, and we have 6. We're almost at the positive on the inversion here too. So that kicks off the basically 2 years of market relative weakness. So guys, stay tuned. We've been following macro, and you follow seasonality. You go with the probabilities until they don't work. So you have to be mindful of it. And we really ratcheted down our swing trading, Phil, here in the last 2 weeks. We basically been doing a lot of day trading, which has been really, really good because high vol helps you in that regard. And we've been doing the pair trades too. I think we got a beautiful relief in Bitcoin here that's going to help stabilize some of those high yield trades that we've been working on to get us maybe positioned into that 2-year desert that's coming. But, I think Bitcoin, maybe we're going to talk about it tomorrow, see if Bitcoin could, get ahead of steam here, ahead of that move, and then get us really positioned well. TLT also helped really well too, Phil. It held support. And I'm telling people, get some TLT in your portfolio because it's going to maybe one of the few things that's going to be up. TLT, SARK, pair trades, NVDS, those are going to be your go-tos. So you better have some of those building positions in those now. You could complain a little bit when they're going against you as this market starts to do its final claw, but you're going to be happy to have them when this thing rolls over, because when it rolls over, Phil, it's not going to roll over like this. I think it's going to be one of those 2000 to 2002 markets where we just keep grinding down and people keep buying the dip and losing money every time.
Yeah, and then you'll get like these gap downs, right? The market's conditioned to fill those gap downs whenever we get them relatively soon. Not in a bear market, those gaps will remain for months on end, and you'll get a series of them. And so those are very dangerous conditions when you have breakaway gaps to the downside that don't recover. They'll take months to recover, and that's where people get trapped because they think, oh, we'll run back up there real quick. In a bull market, you do. But in a full-blown bear market, which a lot of younger market participants have not experienced really, because we haven't really had one since 15 years or so, that's going to be a new environment for them to navigate. So yeah, it's going to be tricky, but that's where you get a couple old dogs like us that have been around these bear markets once or twice. It's nice to have some guidance through those new times that we're going to be going into.
Yeah, and the funny thing, man, and we'll do a podcast on that because people think, well, I'll just short the market and get rich. I showed people this week, when you have big down days, you take profit.
Yeah.
You take profit because it'll trap you. You'll get trapped every time. The market will reverse and reverse and reverse and reverse. So literally you get into the flow, can't get greedy, take your profit, wait till the next day, watch the action. And we'll talk more about that when we think it's getting closer. But with that, guys, I hope you guys have a great weekend. If you're not busy tomorrow, check us out. We have a great podcast on Bitcoin tomorrow, and check out our service. People made 10 years worth of our service this week in some of the trades they did. So we definitely give you a good ROI on what we do. Have a good one.
See you guys later.
Trade Genius.